99% of Web3 projects earn zero cash revenue. Not low revenue. Zero. A 2026 Tiger research report cited by CoinGecko confirmed this across thousands of active blockchain projects. These companies raised millions from venture capital, hired engineers, ran conferences, and printed hoodies, all while generating literally no income from actual customers. By the end of this video, you will know exactly how the Web3 dream collapsed, including why smart people got fooled, where all that money actually went, and the one honest signal that separates the tiny fraction of real value from the enormous pile of wreckage. The signal that 99% of people still miss. If you lost money in NFTs or crypto between 2021 and 2023, this video is specifically for you. And if you are wondering whether to trust the next wave of Web3 hype, you need to stay until the end. Because the last point I make is the one that will actually protect your money going forward. Let me be clear about something upfront. I am not here to tell you crypto is evil or that everyone involved was a criminal. Some were. Most were not. What actually happened is more complicated and more interesting than either the believers or the cynics want to admit. So let us do the honest autopsy. The first thing to understand is that the numbers were never real. Stop. Before I go any further, I need you to picture one specific person. His name does not matter. But in November 2021, he wired $62,000, his entire emergency fund, into a collection of Cartoon Ape JPEG. By March 2023, that portfolio was worth $800, not $80,000. 800, that is not a correction. That is a controlled demolition. He is not unusual. He is the median story. I want you to picture your neighbor knocking on your door in late 2021. Big smile. He just sold a JPEG of a cartoon ape for $48,000. You are confused. He is ecstatic. The art NFT market that year hit $9 billion in total trading volume. That number is real. What was not real was the assumption underneath it, that this was a market, not a momentum game. By early 2026, that same art NFT market had shrunk to $8 million in trading volume. That is a collapse of over 99% from peak to trough, according to DappRadar's April 2026 analysis. Think of it like this. Imagine a stadium that held 100,000 fans in 2021. Today, the same stadium holds fewer than 1,000, and most of those people are trying to sell their seats. The Wall Street Journal called it in May 2022. Daily NFT sales had already dropped 92% from their September 2021 peak. Active wallets in the NFT market had fallen 88% from November 2021. The crowd had gone home, but the marketing kept going. The conferences kept running. The Discord servers kept posting, because there was still money to raise even after the customers left. Here is your action step from point 1. Before you invest in any asset class, crypto, NFT, real estate, whatever, I want you to find one honest measure of actual user demand. Not price. Not volume from wash trading, actual paying users or genuine transactions. If that number is collapsing while the price is rising, you are watching a momentum game, not an investment. But here is what most people do not realize about why the projects kept failing even after the market was obviously B.